The infinite banking concept is a mental shift. It's a conceptual shift inside of your brain. And these myths are relating to specific things, but ultimately, in my mind, behind it is the human condition.
All right, we're going to be talking about the 5 myths today. Number 1 myth is infinite banking is only for the wealthy. Number 2, the returns are too low compared to other investments. 3, I think I'm too old. This is for young people, isn't it? Or 4, if this strategy was so effective, wouldn't everybody be using it already? Or the 5th myth that we're going to be breaking down today, debunking. The infinite banking concept is only about life insurance. And see, I think that was one of those that I struggled with early on. If you haven't heard my story, I was a certified financial planner. I've been investing through the markets and helping my clients do that. And every time I'd ever heard anything about this idea, I just thought it was for the people who weren't smart enough to use the stock market to help their clients build wealth. And boy, was I wrong. When the markets crashed and everybody else in my world was palms up to the sky trying to figure out what to do, there this group was over there helping their clients every single day build wealth and create true financial freedom. I came back so fired up from this conference, I went straight to my buddy, Joey. He was in my Sunday school class, and I said, Joey, I got a book for you to read.
That's right. And man, it was a shocker to me because a lot of these myths were the things that I immediately had when I read the book. And the only one that didn't apply was this is for young people because I was like 29 or 30 when you did. But I'll tell you, the interesting thing about this is I was in the middle of the financial world. I was behind the scenes of the big bank, Wells Fargo. And the shocking thing is nobody around me knew anything about this. That the highest level employees had this actually being done on their lives and they weren't aware it was happening. So it just goes to show when Nelson said in his book, if you know what's going on, you'll know what to do. That was the unlock for me. And I'm excited to dive into these myths with you today. Now, the next thing I'll share is, you shared with me, Russ, this idea. And somewhere along the lines, Jamie was one of my clients at Wells Fargo. And I said, hey, Jamie, you might want to check out this book. He was already kind of interested in the idea of infinite banking. He had heard about it. And I'll let him take the story from there.
Yeah, thanks, Joey. No, I mean, so my quick story, I was investing in real estate, found out I was having twins. They say that children change your lives. Well, 2 at one time really change how you think about the world. And through the real estate investing, process, I realized I wanted to control more of my cash and I wanted to control it in the most efficient way possible. And I knew that if I could control more cash, I could do more real estate, which would free up more time to spend with these little girls. And so I think the big point for me was I tried to figure this out on my own. I tried to go down all the rabbit holes, the internet, rabbit hole that could take you many different ways. And finally, I called Joey. I was like, I need you to explain this to me. I'm missing something here. And a lot of these myths were holding me back from taking that leap. And, I think that's a big takeaway is you were able to explain this to me in a way that just made so much sense. And I know that we work with clients to do the same for them every single day.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out how does this all connect into my own personal system.
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS. Mark, my father-in-law, your uncle, came to Hawaii and told you, hey, you should be talking to Russ. He's doing interesting things in the financial world and you're doing interesting things in real estate on the side as a pilot. So you got exposed to this in a different way. Talk about some of the hangups you may have had early on.
I had a lot of the hangups that everyone that we're talking about here, and which makes it so great when I'm able to hop on calls with people and I get to hear those. My mind immediately is taken back in time to I can understand where that's coming from. So, infinite banking for the wealthy, returns are too low, but really that last one or the one that I like is, if it's so good, why isn't everyone doing it? Well, if you're playing the game of I have a secret, you're really hurting everyone around you. And that's what was so great about our example was I had a loving uncle who knew I was into these quote unquote alternative investing through real estate and looking for passive income. And you and I met for a topic totally unrelated to infinite banking. But I think that's what we're going to talk about today is the infinite banking concept is a mental shift. It's a conceptual shift inside of your brain. And these myths are relating to specific things. But ultimately, in my mind, behind it is the human condition. And so we're gonna go through those together with you to help break these myths apart and hopefully give you the clarity to see that, hey, maybe you should hop on, Wealth Out Wall Street /free call and figure out, is this something that could be implemented in your life?
Yeah, 100%. All right, so let's jump in. I know people are ready to tackle some of these, and maybe they're challenged by this. So first one kind of on the block we said is that infinite banking is only for the wealthy. Jamie, how could you demystify that for people? How help them understand why that's maybe not true?
Yeah, no, this is one of my favorites because IBC really is about controlling your cash flow. So I'd say we need consistent cash flow. But what is wealthy, right? I think Elon Musk is super wealthy. People might think I'm wealthy. There's a whole range of wealthy. And so these policies are super customizable. We work together to really figure out what you have available to start saving, what your goals are, and what are we trying to accomplish. And then we customize a plan around that. I'll give you an example. I'll call them Ben and Sally. There's a couple I was working with in their mid 40s, and they wanted to start building passive income. They'd been doing all the traditional things, but they felt really, income rich, cash poor, right? They just didn't feel like they had a lot left over. Through our process of working with them, we were able to uncover, several $100s of inefficient cash flow. And that's something we do with every single client. And they started just putting $1,000 a month into a policy that is now growing uninterrupted forever. They're using those dollars to go and start building a land flipping business and, change the trajectory of their lives. But when they came to me, it was, I don't have enough money to do this. They had this misconception, myth, if you will, that they had to have they had to be super wealthy or have a ton of cash sitting on the sideline to start this process. This process is about controlling your cash flow and getting started with that. And then we can always grow and expand from there.
All right. Joey and Mark, I want you to jump in there. What strategies have you seen work for people who are starting maybe at potentially lower income levels?
Well, I'll go ahead and tell you, number one, I will agree with this myth for the people who are underwater and just trying to survive. Right. There's a reason that Dave Ramsey does not like this idea of infinite banking, because the people that he's talking to are really spending more than they make. Like they have a human condition, which Nelson applies immediately in the book, Become Your Own Banker. If you haven't read that, you should. But for the people that we're talking to today are the people that have some surplus, right? They live below their means to some degree. And to Jamie's point, a lot of people are unnecessarily putting money in places that they don't have control of, they don't have access to, and they do feel cash strapped because they just haven't been shown, man, what are the things you're doing with money, and is it getting you closer to or further from financial freedom? But I'll tell you, some of these concepts, I've even seen people like, for instance, one of our clients, Jim, we'll call him Jim. He had some significant debts he had built up, and he was trying to use just cash, right, to pay those things off aggressively. You've heard like a debt snowball type of scenario, and that's okay. But when you actually use the infinite banking concept, and in his case, he started to use that concept to roll all of his debt payments as he paid them off into the next one to pay it off. He started to recognize, one, he was getting closer to financial freedom by paying those things off. But as he then engaged with some of our content through the podcast, through our mastermind, he was then actually to be able to be enlightened to a lot of investment opportunities that then he stopped. Once he got rid of the really inefficient debts, he was then able to take that money from his infinite banking system and start investing for cash flow, which actually catapulted him way faster towards financial freedom. And so I would say, even if you are thinking, man, I don't have a lot left over every month, but I've got some goals, I've got some things I'm applying this to, this is actually a much faster way to get those things accomplished. And I think it starts you on the journey of education that will actually get you to financial freedom much faster.
Here's the thing. I think most of us wouldn't necessarily call ourselves wealthy. No matter where you are on the spectrum, like we may have a decent income, but we feel really cash poor, right? And it doesn't seem like the wealthy would say that they're cash poor. So no matter where you are on the income spectrum, like wealthy is relevant to the people maybe you're spending time with, but also to how you feel about it. So oftentimes, Joe, you give an example of people paying off debt, right? Maybe debt's a great thing for you to get rid of. And in a lot of situations, when we find that people get into our world, they learn how to become an investor. Debt is the thing that they don't care about eliminating. They say debt is actually the cheapest thing I could do. Paying it off would become the most expensive. And if you don't want to know what I mean by that, you need to go to whatsaboutwallstreet.com/PIOS. That's an ebook that we wrote on how we turn active income into passive income. And it takes you through this progression of learning how to become a better investor. Mark, what would you add to this last point as infinite banking is only for the wealthy?
Had a gentleman that we had worked with in 2020. And at that time, we went through the process and he said, look, I get the infinite banking, but I just don't feel like my finances are where they need to be to do this. I don't feel like I have enough money to do this. And even though we had worked through that condition, he felt it was worthy of putting a pause on. Well, fast forward to 2025. I reached out to him because he's local. I do cash flow games for people that are in the local area. And he said, man, I was just getting ready to email you because I'm ready to do this policy. And he explains what's happened over the last handful of years. Had to take a loan out, had to do some other financial things. And he said, man, if only I would have started this back then, I could have taken a loan from myself. And I said, man, what a great revelation though, right? I mean, he's now at a good place. And so we actually did a forensic rewind, and because he had even asked, I was thinking about it, but I didn't want to rub salt in the wound. And he goes, what would this policy have been like if we would have started 4 years ago? How big would my tree have been, to Nelson's point, if I had planted 4 years ago and I'd actually be ready to start harvesting fruit off of this thing? And so it just shows that whatever you believe the definition of wealthy is, whatever you believe the definition of, well, I don't have enough money to, quote, start this. Are you sure? Are you really sure? Because would it be worth having someone take a forensic, impartial, third-person look at your finances? And to Joey's point, maybe you're siloing cash. Maybe you're taking your team and you're segregating them out and you're separating them. You know, there's a reason SEAL teams go in as a group of individuals. They don't send them in one at a time for individual missions. No, there's strength in numbers. There's synergy. So how can we get synergy from your dollars by putting them together in a place that you control? And again, like we had said, wealth is a relative term. You'd be surprised what you can do. And the only way you're going to move is to take that first step.
One of the things that you may be encountering through this whole podcast is crap. I've been thinking that very thing and I'm not started and I've just wasted time and it's maybe too late. Well, we're going to have uncovered that truly is a myth as well, because being too old, right, is relevant to your scenario. So I'm going to jump to, I think I'm too old, because that is a common thing that people are going to say is that I wish I would have started this earlier. It is probably, I know it's not probably, we've done podcasts. And one of the most common things we've heard, Joey, on our podcast when we've asked is, now, based upon what you know about infinite banking concept, what would you do differently? And the reply is what?
Every time is, I wish I would have known about this 20 years ago, right? Every time, without exception.
All right. So that's a myth, right? I'm too old. How can we break that down and debunk that?
Well, I would say the number one example of the reason why this is a myth is the very founder himself, right? Nelson Nash didn't even come into his knowledge until he was 52, right? He was 52. And some people would even add to that. I'm going to add something to this myth. They say I'm either too old or I'm not healthy enough. Well, he was 52 and he had a quadruple bypass heart surgery. So he's uninsurable. But yet, the very man who created the entire concept ended up later on in his life with over 40 policies and was leaving a legacy to his now widow, and then significantly after that, his grandkids, kids, and great-grandkids. This is not a concept that can be limited by your age or your health. You just have to understand how it works so that you can apply it to your scenario. I'm going to keep it very simple with my example. I'm sure there's other stories of clients that we have that are older than you would think. So I'm going to leave that. Maybe Jamie, do you have something you'd like to share under that?
Yeah, no, I mean, I think that's a great point. The question I'd like to ask people is it ever too late to take control of your finances, right? And use the power of uninterrupted compounding to your benefit. I'll give you an example. I work with a couple, we'll call them Sally and Sam. I'm going to make up names here on the spot. They were in their 60s, early 60s, had retired from kind of the traditional employment, and they were working on starting a land flipping business. They wanted to do that for a couple of reasons. One is they wanted to add additional cash flow to their retirement age, to their life for the next 20, 30 years, hopefully, right? But they also wanted to start building something to bring their kids in. They wanted to build a legacy and to have a business that they could pass on to their children. They started to really feel, I'll say, the pressure of wanting to give something back to the kids. So not only did they want to control the finances, but this is insurance. The death benefit was important to them, and the ability to use their cash to build a business to create a legacy for the family was important to them. Instead of trying to just accumulate, which they had done well over their lives, and not run out of money, they said, how can I use this money I've accumulated to actually build cash flow over the next 20, 30 years, as well as a legacy, meaning death benefit and business for my kids to pass on as long. So quick example of somebody who was in their 60s. I'd say it wasn't too late for them. That's definitely not too late for you either.
Well, you said, I think you said 62 there, or maybe my brain was just, hallucinating. But that is exactly how old my father-in-law was when he started the first infinite banking system, and it wasn't on himself. We actually learned this after my wife had just started her dental practice and had taken out a $700,000 loan with Bank of America. He's sitting on a bunch of cash because we had just sold a bunch of Bank of America stock during the crash that was happening in 2007 and 2008. And I shared with him, hey, we could buy an insurance policies on my wife's life, take your cash, loan it to her, pay off the debt, basically in essence, refinance the debt with Bank of America to you, and have her dental practice now start making that like $7,500 a month payment to you for the next 15 years. And he's like, is that legal? Can we do that? And I was like, 100%. So he started an insurance policy in his 60s, not on his life, on my wife's life, and did a private loan at the same time, increasing his rate of return from roughly zero to 7.95%, which was the going rate at the time, which was really good when the interest rates were pegged at almost zero, and had consistent cash flow. Because again, passive income greater than monthly expenses is what financial freedom is. It's not having $1 million, $5 million, or $50 million in the bank account, because you don't know how long that will last. Mark, what else would you add to this last point of, I think I'm too old, this is for young people?
Can you be too young to start? And the answer is yes. 14 days old. 14 days old is the youngest you could start this. So if you're thinking you're too old, you might be thinking, well, I might be too young. Well, if you're 14 days old, you're probably not having that thought just yet. But in time, you may. So there's both sides of this. And what's great is there's so much flexibility built within this that we can do policies on children that are 14 years old, 14 days old. And now you have an incredibly long runway to be building the system. So if you're thinking you may be too old, well, that might be a misconception you have, and you're never going to know until we actually start talking and we actually start trying to see about implementing this strategy. So I would say don't let that be the barrier to you learning about this, because you know what? Even if you might not be insurable, what about your loved ones? I mean, that's another myth that we're going to talk about, right? Hey, if this is so great, why isn't everybody doing it? Don't play the game of I have a secret.
Yeah. So here's the thing is that information is free. Implementation is where it's at, right? You don't know until you start taking action. You get some reps in. And for some of you, you're like, I've just been on the edge. You've been like Joey, Mark, or Jamie. You're sitting doing another job. This wasn't your world. You didn't understand this, and you needed to talk to somebody who had expertise in this. We give every single person who listens to this podcast an opportunity to have a free 15-minute call. So if you go to wealthwithoutwallstreet.com/free call, one of our many coaches who has vast experience in this personally can help answer your questions and help understand if this is something that you should take and go deeper with, or if it's something that maybe you're not a fit. All right, let's go to the third myth. I want to break this down. It's the returns are too low compared to all the other investments that I'm doing. Mark, when I met you, you were doing real estate. And I'm sure this had to be a conversation that you were thinking about. It's like, man, I'm having success. I've got some appreciation, especially in the state of Hawaii. And then I got cash flow in other states other than Hawaii. How is this life insurance policy that only earns 4 or 5% going to match up with that?
Oh, it doesn't. It's absolutely horrendous. And oh wait, I'm sorry, I didn't realize are we talking about the infinite banking investment? I thought we were talking about the infinite banking concept. This is a conceptual idea, gang. So if you're looking at this in terms of, well, if I invest my money into this properly structured dividend paying mutual whole life insurance policy, wow, look at those returns. That's just nothing really exciting. Wow, look at my real estate. It's 8 to 10% or more if you're doing flips like Jamie. Or wow, look at my, this or my that, my long-term rental, my short-term rental, my Turo, what have you. Well, compared to what? This is not an investment in that genre. This is an investment into your banking system, but this is not an actual insurance investment strategy to get cash flow. This is a place to store the cash while it then flows into the investment, which creates the cash flow that hopefully ultimately is going to grow to pay for the storage facility as well.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Tribe, if you're still searching for what is going to be that passive income source that's going to push you over the hump, it's going to help you become financially free, head over to the Art of Passive Income podcast, where our friend Mark Podolsky breaks down his amazing land flipping method.
You've heard us talk about how this one strategy has created over $30,000 a month in passive income for Russ and I. Do yourself a favor, wherever you listen to podcasts, go hit the subscribe button to the Art of Passive Income podcast today.
Joey, have you seen examples where clients have come in and they've combined the infinite banking concept with other investments successfully?
All day long, man. I'd like to think about specifically, we have a lot of people in the land flipping world. And, you ever go to the landgeek.com, by the way, they're friends of ours. I'm actually doing their boot camp coming up very soon. And if you ever check out their boot camp, they talk unashamedly about getting 72% returns. I don't know about you, but if you've been looking at the Wall Street game, that's not even in your vocabulary, 72%. You would never even dare to say something like that.
But you can't, because you get thrown under the SEC jail, right? You're limited to what you can say, even though what you're saying, the only thing you truly could say is it can lose 100% of its money.
Exactly. But just as an example, I'm in those boot camp meetings and they're talking about this. This is like their standard deal. And so you think, well, how could this get any better? Well, the only way is to get better with a peanut butter sandwich is to add the jelly, right? The peanut butter and the jelly. Why do we have to pick just one? And in this case, when we start combining infinite banking with whole life insurance, the IBC process, now we've created 1 + 1 = 3, right? We now have not only the land at 72%, we also have our cash continue to grow, because what happened in the concept, if you're not familiar, is the money is stored in your whole life policy or system of policies. You take a loan against your cash value from the insurance company. That means your money continues to grow uninterrupted. So you have the growth on your cash in your policy. You have the growth of the land business at 72% per deal that you're doing. And subsequently, you've now created a legacy system, because now all of that has an additional death benefit that is going to be passed tax-free to the next generation. Now, you tell me, which one would you rather have, right? The cash or the land business, or the and asset, as we talk about a lot on this podcast, is the cash and the land business and the death benefit and the generational legacy vehicle that exists. So that's just a very specific thing that we see all the time in our community.
See, there's byproducts in everything. If you've ever listened to Nelson Nash when he was alive giving a seminar, he would talk about how power plants will take pine trees, for example, and they will create energy from it. Well, the energy actually was a byproduct. What they were trying to do initially is create paper, right? So they take the pine tree, they would strip out all the bark and just try to create pulp out of the wood. But they had all of this bark piling up and they didn't know what to do with it. Well, then they were like, well, if we burn that stuff, it will actually create amazing power. And the power was so great, it exceeded all the electricity needs that they had at their plant. So they actually were able to then create energy that they could either sell themselves or they could store it up and use it in the future. Well, the death benefit that Joey just talked about is our job is what we're trying to do is create cash value and then try to create cash flow. That's what all we want. We want access to cash and we want passive income. The byproduct to that by using this concept is that we get a death benefit. We get this amazing additional item. That's something that when I first started, I didn't have but a little bit of. You would think I was a certified financial planner. I would have, done all this mathematical calculation, which I had, of how much life insurance do I really need to have. And it was like $1 million, $2 million. Well, now I have almost $20 million in total death benefit as a byproduct of doing this process, in addition to the cash flow that you see as report on every single month. All right, I want to jump to myth number 4, because I know everybody's like, well, wait a second. If this strategy was so effective, wouldn't everyone be using it already? Jamie, how would you break that down?
And I love this one because it was a huge holdup for me personally. I was like, I can't find anybody I know that's doing this. I must be crazy, or this must be a scam, or this has something weird must be going on, right? And I think it really was a lack of education. I said in the intro, I finally got a hold of Joe. I was like, please explain this to me. Something's not adding up, right? And it really is. I feel like in today's society, we are brainwashed by the mainstream financial advice and what we are supposed to be doing with money, right? Usually focusing on the market, 401ks, 529s. If you're not doing that, you're not being responsible for your financial future or your kids or your family's financial future. And what I have learned, and I was learning through the process of wanting to store more cash, right? That was my goal. I wanted to build passive income. I knew I needed more access to capital, was that there are a lot of people doing this. It's just a matter of, Mark mentioned this earlier, a little bit of a different way of thinking, a change of our mindset about what we're trying to accomplish. And I would say if you don't want to control your financial future and you want to delegate or give that responsibility to somebody else, this may not be the strategy for you, right? If you just say, hey, you take control of my financial future, then go ahead. But if you want to control your financial future, where we store our cash is one of the most important pieces in that journey. I don't know. I don't know if that's helpful, but those are my thoughts on it.
Mark, how do you feel like we can help more people understand that infinite banking isn't just a hidden secret, right? You've been talking about that secret constantly. How do we help them understand that this is a tool available to everyone?
Who's in your community? Who are you surrounding yourself with? Who are the people that you are talking to about these types of things, about saving, about investing, about growing for the future? I think of in Nelson's book, he talks about the arrival syndrome. I was an airline pilot. We did pretty good. I'm not going to lie. We had a pretty strong negotiating arm, and it did very well to provide us a wage for the service that we did. And I see this a lot with that community, where, wow, we're highly educated, we're doing really good. Look at how well everything's going in my world. So I've arrived. I'm closing my mind off to anything new because it's cognitive dissonance. It doesn't make sense. If it would have worked, I would have known about it and I'd be doing it now. But if you can start to surround yourself in different communities, get out there, meet other people. We at Wealth Without Wall Street have communities just like this. We've got a passive income mastermind, a collection of a lot of entrepreneurs, business owners, investors, people that are on varying stages of this journey. And you know what's really nice? They're all doing this in various degrees. And so now you're not the black sheep off to the side. You're not the lone ranger out there on your own trying to pave a path. Why don't you get around some other people that are doing it and ask those questions? Be able to ask, hey, what was your turning point? What was the thing that helped you flip the switch? Because I know growing up in a Asian home, my dad was Japanese, my mom was Caucasian, but in that time frame, nobody talked about money. We never talked about saving. We never talked about investing. That's just something that wasn't talked about. Well, now we live in a world where we have information at our fingertips. Well, how about we get a community at our fingertips too? We're all across the country. Zoom, oh my goodness. Hey, we can all meet, we can talk, we can exchange ideas. And that's one of the things I really like about the community is it solves this. Well, this is such a great idea. Wouldn't everybody already be doing it? Would you like to meet some people that are doing it who can tell you, hey, these are the hiccups I had. These are the holdups I had. And this is how I overcame it.
Yeah. Well, they say that we are a culmination of the 5 people we spend the most time around. I would say that this myth of if the strategy was so effective, wouldn't everybody be using it already, is not a problem when you show up to a Wealth Without Wall Street event. You're surrounded by successful people who are doing amazing things, who are all using the infinite banking concept at a very, very high level. Stallion, I remember
Russ, hold on. I'm going to cut you off there. And to go back to an earlier one, varying degrees of quote wealth.
Right. Yes.
We're going to have different definitions of wealth within that community. Sorry.
Good point, Mark.
Mark, Joey, I remember sharing with you the balance sheet of Wells Fargo, the bank in which you were working at, to help you understand that maybe this wasn't just not only a little known strategy, but not a strategy that was a penny ante idea either.
Yeah, exactly. I love sharing the story because this exacerbates this myth, right? If you think that because it's such a good idea, everybody should know about it. I literally, when you gave me that book, actually you sold me that book. I still am pissed about that $20 you charged me, but I took it around to the bank presidents, the regional vice presidents of the bank, the highest level business bankers, the people that were dealing at a very savvy level financially as it relates to the bank's doings or their clients. And I went around to them and said, hey, I'm learning about this. I've read this book. They're talking about using cash value life insurance, whole life insurance as a vehicle to like create a banking system and all this stuff. And not one of them said it was a good idea. Like they all poo-pooed the idea. Man.
So in this regard, like you were thinking, okay, well, that must be true. Like this, why aren't they doing this? Like this must be a bad idea.
Right. I must be missing something. And here's the confirmation. Okay, they're all saying this is a bad idea. Until, Russ, you showed me the balance sheet. Wells Fargo Bank, $19 billion in cash value life insurance. And you know what was even more shocking is when I recognized the fact that who in the world, where did the bank get the ability to have that much life insurance? It's because they were insuring the very people that I was asking if this was a good idea. Like the regional bank presidents were all insured to the max capacity that the bank could get. And they were not aware of this concept. It was literally being done under their nose. So if they don't know what's going on, then what do you think your chances are of having heard this from a friend, or like if you had heard it from a friend or a family member, count yourself lucky because there's just not enough people that understand what's going on.
Well, the mission of the Nelson Nass Institute was to create the 10%. The goal was to get 10% of the population who not only knew about this, but were implementing this in their life. So this is a unknown or lesser known and a lesser implemented strategy for the typical person. Now, the wealthy, like whatever you want to define wealthy, the large corporations, the banking institutions, they're all doing it. Like there's not a bank out there that's like, I've never heard about that idea. No, they know about it. And the majority of them are putting in, 8, 9, 10, almost 10 figures into this concept. This is a huge, huge, huge idea for them. All right, I want to go to myth number 5, which is infinite banking concept is only about life insurance. That's all it's about. And only people who are talking about this sell it. Now, clearly the 3 of you do now, but you didn't before. You were customers of this. You were using it. It was changing your life. So, Mark, jump in there. Why is this really a myth?
Because this is about the human condition. This is about habit patterns. This is about thought processes. For me, okay, great, life insurance. I mean, when I when I shared with my wife how much quote life insurance I had, I never thought I would ever have that much value on my, I mean, granted, I know I'm precious. Mommy says I'm special, so therefore I am. But it's just a place to store the cash. And life insurance just happens to be the tool that we're using. And so it's not the infinite banking life insurance concept. It's the infinite banking concept. It's a thought process. It's how we're going to use this tool. Just so happens insurance has been around for a long time and seems to be a pretty great vehicle. If someone can show me a better one, I'm all ears. I want to try to stay away from that arrival syndrome we talked about earlier. And I'm open to hearing new ideas, but I haven't heard one that beats this strategy with this tool in this implementation.
Jamie, how are you helping people that are in the real estate world, because that's the space that you have such expertise in, helping them understand this isn't just about life insurance?
Yeah, one of the big things in real estate is people, I've said this, I feel like 10 times, but people want more access to cash, right? They understand that if they have more cash, they can do more deals. And the fun part about real estate, I have a client that specializes, he does some private lending in BRRRR projects. And so if you aren't familiar with BRRRR, that's you buy a house, you renovate it, you rent it out, you refinance it, you get your cash back and you repeat it. And so he's in the cycle of sending money out, getting money back, sending money out, getting money back. And when he saw the efficiency of the cash value life insurance, the IBC policy, and how the money can flow through his world in and out, he controls the policy loans. He dictates when he repays the policy loans. And so he'll send cash out. He'll watch his cash value in the policy continue to grow. And when he refinances a property, gets paid off from a private loan, he refills that system that never stopped growing. So now instead of just focusing on what he was earning in the investment, now he's earning while he's earning in the investment, and he has a place to refill his system. Prior to using IBC, he was using a checking account. And when money went out of that checking account, you said this earlier, the balance went down, right? The balance went down. He made his return on the investment, refilled the balance back up to whatever it was at. Now he's refilling a balance higher in IBC. But to Mark's point, I think it is important that IBC uses a tool of specially structured mutual dividend paying whole life insurance, but it is about how do we use that tool in our lives to control the financing function, right? How do we really be a good banker? One of the benefits too of real estate that is kind of skipped over a lot of times, I think, is creditor protection, right? That is a big thing for real estate investors, is what happens when I get sued, not if I get sued, but when I get sued. And we try and layer in LLCs insurance, property insurance, liability insurance. But one of the cool things about whole life policies is that depending on your state, each state has a little bit different rules, but you have a certain level of creditor protection against your cash value. So if you ever to get sued and somebody tries to come after your personal assets, that's protected in some way, shape, or form. Again, look into your state for the specifics, but that's one little benefit that I think is super important as well.
Yeah. Well, Jerry, I'm gonna gauge you here, because I think you and I go way back to 2009 of implementing this in our life, right? A little longer hair on the cat, if you will, than the other two coaches. So I want to go back, and I'm going to say that I believe that this is an actual true statement for the majority of our life insurance industry, that infinite banking really is about life insurance. And I will say it was true for me, because I didn't understand all the opportunities, the infinite opportunities that existed, because I had a finite surroundings. I was only looking at this as a way to use it to, buy some cars, because that was the example that the book talked about, right? Like, I could buy a piece of real estate, and I bought one piece of real estate. I mean, I didn't understand really its true value. All I understood is that the whole life insurance policy can't go down in value. And that was a big important thing for me, because I just lost a ton of money going through the market crash. And I kind of ran to this as a safety blanket. And I was sitting over there as Chicken Little, and I'm like, okay, I got this whole life policy that earns this 4 to 5% tax-free, as Jamie just said, creditor protected. I already said it gives me a death benefit, all these extra little benefits. But I really didn't understand the infinite use of it. I didn't understand, how do you create this thing called passive income? Would you agree with that statement? And how has your mind expanded as we've built this idea called the passive income operating system?
100% agree with you, Russ. And to your point, if the policy is the end of the infinite banking concept, I'm going to be so bold to say you're going to be sadly disappointed with the results. Okay. There's a lot of people out there that just try to say, oh man, this is a better savings vehicle. And it is. But I would quote Robert Kiyosaki and say, savers are losers. Savers can never be truly wealthy because they can't outpace inflation. And to look ahead and say, oh, if I just put enough money away, then eventually I'll have enough to live off of and all that. That is, number one, a very, what's the word I'm looking for? Scarce mentality, right? So in order to be wealthy, you cannot be scarce. The second thing is, in order to be free, savers cannot be free. Savers have to eventually become an investor. And to your point, Russ, I was not an investor when we first learned this. And so as an element of encouragement here, even if you're not an investor right now, I would say go ahead and start this process, because it will change you into an investor. It will require of you to turn on the creativity that you never had before. And this is the part where it can kind of sound a little woo-woo, like, oh man, infinite banking concept, it's got this, it's ambiguous or whatever. But the idea is this: when you have access to capital, and if you don't have that today, it's hard to even imagine what I'm saying. It will now start to challenge you to say, what could I do with this? And if you don't know what to do with it, it's a little scary, to be honest. You're kind of like, well, I could do, maybe just buy a piece of real estate. Like, that was the extent. Russ, if I'm being honest, I think you and I would agree. It was, I could either buy a piece of real estate, or in my mind, because I had done loans for so long, I could do a private loan. And that was literally the extent of what I thought was possible. So as you do this, you will become, the idea of the life insurance becomes very, very low on the totem pole, the actual use of your system. And to Jamie's point, having unstructured loans, having the ability to dictate how I pay it back and at what time frame, and all, your life changes massively when you implement the actual system.
Well, here's the caveat I'm going to add to what your statement is if you surround yourself with people who are using it to do something bigger, if you actually use it to create passive income, if you go to wealthwithoutwallstreet.com/PIOS, you build a framework of the passive income operating system where you turn active income into passive income. If you want a coach who actually has built passive income, not talked about it, not hoped about it, you go to wealthwithoutwallstreet.com/free call. That's how this becomes a concept that's not just about life insurance. It's about how you can get closer to financial freedom faster. Why? So you can have a greater impact, right? Our job is not to help you retire. We don't believe in retirement. Retirement is a lie sold to you by the financial advisory world that wants to manage your money. That's it. When you have passive income that exceeds your monthly expenses, you can have greater impact in the world. You can serve more people. You can build greater things. When you build a system using the infinite banking concept, it would allow you to do all of those things and more. So if you've been struggling with, is infinite banking only for the wealthy, or I think I'm too old for this, or the returns are too low compared to my other investments, this strategy, if it was so effective, wouldn't everybody be using it? Or is infinite banking only about the life insurance? Hopefully we've helped you kind of demystify some of those. And if those things have been holding you back, but now you're ready to unlock, you're ready to start collapsing time, you're ready to get going, and you want to use experts to help you. One last time, one big plug for us, go to wealthwithoutwallstreet.com/free call. Use the expertise of our team to help you on your way to become financially free faster. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.